Well, good afternoon, everyone, and welcome to Sales Tax Basics. I'm Cindy Nellis. I'm the director of the Penn West Clarion Small Business Development Center. We are very happy that you have decided to join us today. We know there's a lot of questions about sales tax, so today we're going to dive into this topic with our experts from the Department of Revenue. You may be wondering who needs to be registered to collect sales tax, maybe what items are taxable, when does sales tax need to be charged, where do you file and pay, or even how to keep proper records. So we will be talking through all of that and much more. So the Pennsylvania Small Business Development Center established a partnership with the Pennsylvania Department of Revenue to deliver a monthly webinar that provides key information to business owners. There are 4 webinars, each offered every 4 months, and we are offering today Sales Tax Basics. But you can see that the series does include getting started with MyPath, Pennsylvania taxes for new businesses, and next month we will be offering withholding basics. You'll be receiving the flyer for the upcoming events, so we hope that you will plan to attend those webinars. Before we get started, I just want to give you a few reminders for our webinar. Following today, you will receive the PowerPoint presentation. You will also receive a link to the recording of the webinar, our sales tax flyer that I just talked about, with registration links to each of the upcoming webinars. So, a little housekeeping. If you have a question for me, I'd ask that you put it in the chat. If you have a question for our experts, I ask that you put it in the Q&A. And we do have a team of experts with us today, so we do hope to address all of your questions before we finish up today. I'd like to give you a quick introduction of the Small Business Development Center program. We are a grant-funded program with a mission to help businesses start, grow, and succeed. We're here to provide you education, information, and access to tools to help your business make better business decisions. We work with you through our one-on-one business consulting services, and we offer training and topics that we hear you need training in. Our consulting services are provided at no cost, and they're confidential. Our training seminars are provided on a variety of topics that target your needs. We are here for any small business, which generally we define a small business as one with less than 500 employees. We also use our funding to give you access to database information and resources related to industry and market research, implementing marketing strategies, and then finally financial analysis on your business. Pennsylvania SBDC network includes 15 centers, all located at institutions of higher education. We are a part of America's SBDC, a national network that enables individuals and businesses all over the United States to have access to our program services right in their neighborhood. We encourage you to become a client of the Small Business Development Center. And to do that, we will be providing you with a link to sign up to become a client. But please know that I'll also be receiving, I'll also be sending my information, and there's no wrong door. So if you connect with me, I certainly will make sure that we connect you with the SBDC that is in your neighborhood. Okay, why don't we get started? I'd like to introduce you to our speaker, Sarah Swieger. Sarah is with the Pennsylvania Department of Pennsylvania Department of Revenue. Oh my goodness. She started there in 2015 in the Taxpayer Service and Information Center, handling customer service calls for personal income tax, property tax and rent rebates, employer withholding, and corporation taxes. In 2017, Sarah was promoted to Realty Tax Transfer Tax Specialist, working in the Individual Tax Division, and then she returned to the Taxpayer Service and Information Center as a supervisor in 2018. After taking a short break, she eventually returned to the Department of Revenue in her current position as a research analyst in the Customer Outreach Relations and Engagement Division. So with that, Sarah, I am going to turn it over to you. I'm going to stop sharing my screen so you can share yours.
Thank you so much. Let's make sure we're up and running. Okay, can you see my screen okay?
I can. Yep, looks
Perfect.
great.
All right, thank you. Hello, everyone, and welcome to the new business series presented by the PA Department of Revenue. As Cindy said, my name is Sarah Swieger, and I am a research analyst with the Core Division, which deals with the outreach and education for our Customer Experience Center. So first, I want to start off by saying thank you for joining us today and for wanting to learn more about how to properly collect and remit Pennsylvania sales tax. One thing that we do want to emphasize during these presentation series that we do is that the cost of noncompliance far outweighs the cost of compliance. So let's get started. Okay, so today we're going to cover a wide range of information relating to sales tax and the nuances that go into it. We will be defining what exactly is sales tax according to the Commonwealth of PA and how local sales tax is applied. With that, we're also going to talk about what items are taxable, including tangible personal property, services to tangible personal property, and enumerated services. We also want to clarify who must collect PA sales tax, as well as what qualifies as nexus. We're also going to go over how to register for a license, how to calculate the amount of sales tax, and how to report and pay that money to the Commonwealth. Next, we will quickly go over exemptions and who or what they're going to apply to. We're also going to highlight use tax and when it needs paid. And then finally, I'll wrap up this module by going over what resources are available to you should you have any additional questions or if you need further assistance. So let's start off by defining what is sales tax. Sales tax is a 6% tax on the sales within this Commonwealth of tangible personal property, services to tangible personal property, and certain enumerated services. We're going to talk to you about each of these points individually, but before we do, I want to explain what we mean by the sale or a sale within this Commonwealth. So if you buy an item at retail and the item is delivered to, used, or consumed in Pennsylvania, then the sale occurred within this Commonwealth. If a business sells and delivers an item to an out-of-state location, then the sale was not made in Pennsylvania and is not subject to Pennsylvania sales tax. So as you can see on the slide, we have a map. Allegheny County shows 7%, while Philadelphia shows 8%. And this is because of local sales tax. During the 1990s, the Pennsylvania legislature passed a law imposing local sales tax and use tax on certain counties. This was a tax imposed in addition to state sales tax in Allegheny County and in the city of Philadelphia. The rate in Allegheny County is 1%, while Philadelphia is 2%. These taxes are deposited into a fund which is dedicated to pay for specific needs of those jurisdictions. The rules are basically the same, except that the local tax is based on the place of the sale and not the delivery. So let's say I'm in Philadelphia and I buy a meal. I'm going to be charged a total of 8% state and local sales tax on the meal. Now, let's say I live in Montgomery County and I order furniture from a store in Philadelphia. The additional 2% local sales tax is still going to be added based on the location of the store where I made my purchase. So now that we're a little more familiar with what exactly sales tax is, I want to take a look at the individual taxable components. Tangible typically means something that is either material or physical. Tangible personal property is generally physical property that can be touched, such as furniture, clothing, and vehicles. However, there are items that cannot be felt but are still considered as tangible property, such as electronically delivered software. This is distinct from real property or real estate in that it can be moved from one location to another, while real property is permanently attached to a single location. So on the screen are some examples of taxable items that are listed in the law. Some of these are very clearly tangible, such as greeting cards, helmets, and books, while some, like telecommunications, are a little bit less black and white. There are also examples here on the screen that are not specifically in the law, but they do help to illustrate what kinds of items constitute as tangible personal property. So you can see how wide-ranging these items are. If you buy any of these or similar items in Pennsylvania, or you have them delivered into PA, they are taxable tangible personal property. We do have a more complete listing, which isn't available in our retailer's guide, which is the REV 717. There are certain items of which sales tax is excluded per the sales tax law. The exclusions are going to include the following: wrapping materials that are needed to deliver property, such as bubble wrap, pallets used to transport the goods, shrink wrap, and so on. Anything wrapped with a package or used to deliver the package is going to be considered exempt. Grocery store food, unless it's considered ready to eat food, such as sandwiches from a deli. Clothing that is considered everyday wear. Everyday wear items are articles of clothing that are not required as a condition of your employment, like a uniform, and considered to be just your regular clothes. These everyday wear items are not subject to tax. Caskets that a funeral director uses in conjunction with the funeral service are also exempt from both sales and use tax. Regular unflavored water, including mineral waters, are going to be exempt. And then we have sales for resale. This is a big one for many businesses. Industries like department stores, grocery stores, automobile dealers, and so on are all in the business of buying goods and reselling those same goods. In PA, if the inventory or goods that you are buying is for resale, you are not required to pay sales tax, given that you will charge that tax to the end consumer. Sales tax is also imposed on services done to tangible personal property. So basically, the rule is if the item that needs to be serviced is taxable, then the service itself is also going to be taxable. So, for example, let's say my watch breaks and I take it to a jeweler to have it repaired. This transaction is going to be subject to sales tax. Since watches are subject to sales tax, aka they're taxable, then the repair service needed to fix my watch is also going to be subject to sales tax. So on this slide, it shows some other examples of services that are taxable, which may help you better understand this concept. So let's take note of the first item, wrapping or packaging tangible personal property. So I know I just said if it's used wrapping materials as an example of an exempt item, this is considered taxable because we are not mentioning it being used specifically by the seller to wrap or package items incidental to delivery. So the example on this slide is referring to the service of wrapping tangible personal property such as gift wrapping. Enumerated services are those services that are specifically taxed. These are not tied to tangible personal property in any way, but are specifically identified for taxation by legislation. So enumerated services can get very involved, and some have special rules on how to determine taxability. All of these items are specifically outlined in the REV 717 that I mentioned a little bit ago. So I do recommend that you check that out if you are providing any of the services that you see on the screen. Okay, so now we know what sales tax is and some examples of items and services where sales tax is applicable. So let's dive into who should be collecting PA sales tax. The Tax Reform Code states every person who maintains a place of business in the Commonwealth to sell tangible personal property or to perform taxable services is required to be licensed for and to collect sales tax from its customers. So, in other words, the law requires Pennsylvania businesses to collect the tax from the consumer at the time of the sale. What it means to maintain a place of business has changed a little bit over the last several years. So, for an entity to have physical presence, it means pretty much exactly that. To fall under this category, a business must have taxable sales and have some type of physical location, such as an office or a place of business, an employee, which also includes a representative or an independent contractor, stored inventory, rented or leased properties or tangible goods, or they make deliveries to a PA address. Meeting the qualifiers for physical presence means the business would be maintaining a place of business in this Commonwealth. This is going to apply to pretty much all of you. For the majority of you attending today, you're going to be considered having a physical presence in Pennsylvania. I want to quickly look at bullet point number 3, goods or inventory in a warehouse. Under Pennsylvania law, inventory stored in a warehouse, fulfillment center, or any other location within Pennsylvania creates a physical presence with the Commonwealth. This means that the retailers who have inventory stored within Pennsylvania are required to register to collect and remit PA sales tax on any sales made by the retailer directly to Pennsylvania customers. I'm highlighting this one specifically because a lot of people who sell online are not aware of this. Even if you sell through a marketplace facilitator and the goods are stored in one of their warehouses, but the end consumer is a PA resident, you still have a physical presence in this state. So speaking of online sales, this is a good way to transition into economic presence. So even though an entity might not have a physical presence in PA, they may have what's called economic presence. The Tax Reform Code defines maintaining a place of business within this Commonwealth to include having any contact within this Commonwealth which would allow the Commonwealth to require a person to collect and remit under the Constitution of the United States. This statement is referring to economic presence. So if a business makes $100,000 or more in annual PA gross sales, then that business would be considered to have economic presence and they must collect and remit Pennsylvania sales tax. In 2018, the Wayfair versus South Dakota decision opened up the legal door to expand the concept of nexus beyond just physical presence. In the Wayfair decision, the Supreme Court ruled that as long as a state had a uniform tax rate, did not apply the new law retroactively, and provided some sort of administrative assistance in making tax determinations and filing, economic presence is an acceptable standard in making businesses collect sales tax. The effect is to level the playing field for all businesses. So in short, what we're talking about here is out-of-state businesses that sell to PA customers and establishing consistency in the requirements to collect and remit sales tax. Previously, when nexus was determined solely by physical presence, these businesses would have had a huge advantage over PA brick and mortar locations as they were not held responsible for the collection and remittance. With this new law, out-of-state businesses are now treated similarly to PA business locations if they make over 100,000 in gross sales into PA annually. So I just use the word nexus quite a bit here, so I want to take a minute to discuss what that means. So nexus is when a business has either a physical presence or an economic presence with PA. Sales tax nexus is basically a fancy way of saying significant presence in a state. If a business is considered to have nexus in PA by having either a physical presence or an economic presence, then they must collect sales tax on all taxable sales to PA customers. Okay, so now we know who needs to collect sales tax. So let's discuss how to register for a sales tax license. In order to collect sales tax, you must have a license issued by the PA Department of Revenue. The license performs many functions, including demonstrating to the public that a business is a duly licensed agent to collect sales tax on behalf of the Commonwealth. It should be noted that if a business has collected sales tax without a proper license, they should coordinate with the Commonwealth to remit the money immediately, which means about 30 days within collecting it. To register and obtain a license, you will first need to complete a PA online business tax registration application. If you have no pre-existing business tax accounts, you can use the business registration hyperlink that is right on the MyPath homepage without logging into your profile. If you have a pre-existing business account and simply just need to add sales and use tax, you should log into your profile and then use the business registration hyperlink from there. The reason why we encourage this is that by going through your logged in profile, you don't need to fill in the business information for the application all over again. So if you already have a pre-existing business account, strongly suggest going through that avenue. Please be aware that citations are issued for operating a business without a valid sales tax license. Under Pennsylvania law, sales tax monies collected by a business on behalf of the Commonwealth are defined as trust fund money. The money does not belong to the business, it belongs to the Commonwealth. It must be handled according to the law and to department regulations. A business must meet the timely reporting and filing requirements. Proper handling of trust fund money helps to secure the success of a business by avoiding costly penalties. If you are an entirely new business to Pennsylvania, we do recommend that you visit www.business.pa.gov for all of your registration needs. This site is a one-stop shop website, which was established to help new businesses get up and running beyond just setting up their tax accounts. Okay, so now you've signed up for your sales tax license and you're ready to make some sales. You're going to need to know how to collect and remit the tax to the department. Of course, the first step to collecting sales tax is knowing the amount that needs to be collected. As mentioned previously, sales tax is 6% of the total purchase price, including warranties, which represent prepaid taxable services to taxable tangible personal property, delivery, or other services. An example of another type of service that would be included in the purchase price would be the charge for car detailing included with the purchase of an automobile. When it comes to deductions, the basic rule is that any cost a business incurs in selling a taxable good or service when passed on to the purchaser is considered to be part of the taxable purchase. So as an example, if you take a look at your phone bill, it may list a line item called universal service. This is a charge that telecommunication providers may add to your bill to recover their cost of federally mandated contributions to the universal fund. This is a cost of doing business for them, so they may elect whether to bill their customers for this or not. Amounts representing on-the-spot cash discounts, employee discounts, volume discounts, store discounts such as a buy one, get one free, wholesalers or trade discounts, and store or manufacturer's coupons shall establish a new purchase price if both the item and the coupon are described on the invoice or cash register tape. In a recent court case, Myers versus the Commonwealth, it affected how general discounts are handled. The court found that the regulation does not require the coupon to relate to a particular taxable item in order to reduce the purchase. Only the item and the coupon be described on the receipt or invoice. As the court noted, if all items on the invoice or receipt are subject to tax, then it's reasonable to determine that the coupon applies to the taxable items and the purchase price may be reduced. Conversely, when all the items are not taxable and coupons do not identify the taxable items, the description is inadequate and the amount of the coupon cannot reduce the purchase price. So to put it simply, in order to reduce the taxable purchase price, the receipt must identify what products the discount applies to, or all items on the receipt must be taxable. So, for example, let's say I buy 2 hamburgers, which are $2 a piece, and use a BOGO burger coupon. My initial cost is $4 until the cashier enters in a $2 credit for one of my burgers, which is reflected on the receipt as BOGO sale. Since both items listed on the receipt are taxable, this general discount is going to be acceptable and reduces my purchase price from $4 to $2, which would make my sales tax 12 cents. So let's say I'm purchasing these same 2 taxable burgers. plus a non-taxable water with the same BOGO burger coupon. This time, when the cashier enters in the credit for the burger, the receipt must identify which specific item the discount is being applied to, which in this case would be one of my $2 burgers. The discount must be specific in the scenario because there are both taxable and non-taxable items on the receipt. So if that cashier enters in a general BOGO discount that is reflected, then the purchase price would not be reduced when calculating the amount of sales tax, and I would owe the full 24 cents. So if the coupon lists a specific item and receipt or invoice has both taxable and non-taxable items, or if it's a general coupon just showing a % off the total, but all the items I'm purchasing are taxable, then the discount is taken before sales tax is applied. Otherwise, the discount will be applied after the sales tax is applied. Sales tax returns and payments must be filed electronically. There are 3 methods in which you can do this: online, over the phone, or you may use a third-party vendor. We do strongly encourage you to use our online MyPath portal to file and pay your sales tax amounts. Not only are you able to file and pay for the current year, but you're also able to view previously filed returns, access notices that have been issued both from our PATH system and our former eTide system. You can request statements of accounts that are available immediately after you submit your request, as well as send a message to the department and more. Another very important function is that you can grant permission to others, such as your CPA or your bookkeeper, to also view information regarding your returns and payments. You can access MyPath at www.mypath.pa.us or simply visit revenue.pa.gov and click on the icon that says MyPath right from our homepage. Please note that in order to utilize this service, you must create a profile for it. The telefile system can be accessed by calling 1-800-748-8299. Pre-registration is not going to be necessary to use telefile, but you are required to enter any of the 2 of the following identifiers: an 8-digit account ID number, an FEIN, Social Security number or 10-digit revenue ID, and the period ending date for the period you wish to file. Telefile is toll-free and can be accessed 24 hours a day, 7 days a week. Lastly, the department has third-party vendors who will provide e-filing software for those taxpayers who do not wish to use the department's e-filing options. There is a list of approved software vendors that is available on the department's website at www.revenue.pa.gov. A few important things to remember. One is that PA3 forms are not available for download from the internet, and the use of other tax forms can result in a non-filer notification and/or the misapplication of a tax payment. Per regulation, taxpayers who are making payments of $1,000 or more must remit them through electronic funds transfer, which is also commonly referred to as EFT. Failure to comply with the EFT remittance requirements may result in an assessment of a penalty equal to 3% of the total tax due, but will not exceed $500. The penalty may be imposed on all payments of $1,000 or more that are not presented to the Department of Revenue by an approved payment method. So if every quarter you send in a check for over $1,000, you're going to get hit with an EFT penalty every quarter. When you initially register for a sales tax license, your filing frequency is automatically going to be set as quarterly. Near the end of every year, the Department of Revenue reviews the average of the current year's first and second quarter sales, as well as the prior year's third and fourth quarter sales to determine if the filing frequency needs to be adjusted. Semi-annual filers are those who have an actual tax liability that is $300 or less annually. Semi-annual returns are going to be due August 20th for the January to June period and February 20th for the July to December period. Quarterly filers are those with an actual tax liability that is less than $600 per quarter, but greater than $300 annually. Quarterly returns are going to be due the 20th day of the month following the end of each calendar quarter. So that would mean April, July, October, and January 20th. Monthly filers are those with an actual tax liability that is less than $25,000 but greater than $600 per quarter. Monthly returns are due the 20th day of the following month, the end of each calendar month. So that's a lot of dates and information that's been thrown at you, but we do have a yearly due date calendar, which is called the REV 819, which is broken down by frequency to help you remember when your filing due dates are. You can find this form on the revenue website. If your actual tax liability is $25,000 or more per quarter, then you may be required to remit what we call accelerated sales tax prepayments. These are basically advanced tax payments that are made for those who have a very high tax liability for the year. We will have more information available on accelerated sales tax prepayments, but we have found that typically this is not something that new businesses are going to need to be concerned with right away. The Department of Revenue does offer vendor discounts for timely filed returns and payments. This discount is limited to a flat rate depending on your filing frequency or 1% of tax collected, whichever is going to be the lesser of the two. If you collect sales tax on an item that you previously paid sales tax on, you can claim a credit for that sales tax paid when you originally purchased the item. So, for example, Ted owns an aluminum siding company which makes half of its revenue in retail sales and the other half in contract work. He enters a construction contract to install 1,000 square feet of aluminum siding on customer A's house. Ted purchases the 1,000 square feet of aluminum siding at $3 per square foot, and he correctly pays $180 in sales tax on the $3,000 purchase price because he anticipates that he is going to be the ultimate consumer of that siding. Before that contract is performed, Ted decides that he wants to sell the aluminum siding at retail for $5 per square foot to customer B. At the time of sale, he properly collects $300 sales tax from the purchaser who bought the aluminum for a total of $5,000. In reporting the $300 tax which he has collected from customer B, Ted is permitted to claim a credit of $180 for the sales tax that he had paid previously when he originally purchased the item. This is called a tax paid purchase resold credit, or a TPPR credit. This credit shall be taken within 3 years of the original payment of tax on the item which has been sold. It's important to remember that this credit is not for those items that are purchased with the intent to resell. We do have a exemption certificate module, but we will touch on that a little bit in a few slides to cover some of those scenarios. So first, let's recap some of the general rules that we just went over. Filing and remittance occurs at different intervals determined by the department. You can be either monthly, quarterly, or semi-annual filers, depending on the size or the sales volume of your business. First-time filers will always be set up as quarterly until the department has a chance to review your sales activity to determine the frequency if it needs to be adjusted. The due dates will always be due the 20th of the month following the last day of the reporting period. Again, Form REV 819, which is available on the revenue website, is there to help you remember when your due dates are based on your designated filing frequency. Local and state sales tax are filed together on one report. One thing that a lot of people are not aware of, but it is really important, is that even if you don't have sales for a certain period, you are still required to file a zero return. Think of this as an informational return that is letting the department know that you had no sales for that period. You must do this in order to stay compliant with the department. No discount is going to be granted on returns that are filed late. Penalty and interest will be added to late filings as well as late payments. For any late payment of tax, interest is calculated on a daily basis. It is calculated by taking the amount of the tax due and multiplying it by the number of days for the original due date and then by the daily interest rate. The annual interest rate varies by year, so you'll want to use REV 1611 to find out more information regarding how this is calculated. I will touch on this a little bit more later in the presentation. The penalty for past due filings of a sales tax return is 5% per month from the date due until the date filed, but will not exceed 25%. If an underpayment penalty is warranted, it is imposed at a rate of 3% a month on the unpaid tax balance from the date filed to the date paid, not to exceed 18%. Percent. In no case shall the addition be less than $2. One important thing to note is if the proper tax, interest, and additions are not remitted, the department will make an assessment. The next area I want to go over is exemptions. This is going to be a very general overview. As I mentioned, we have a more detailed module that is specifically for the exemption certificate. Unlike exclusions, which are usually items never subject to sales tax, an exemption is a situational and dependent on who purchases the item and how the item is going to be used. Pennsylvania law allows businesses to claim an exemption from sales tax for several different reasons. The exemptions are centered on certain business processes, and their taxability depends on who bought the item and how it's going to be used. To claim an exemption from sales tax, you first need to complete the REV 1220 and disclose a valid basis for the exemption. Keep in mind the purchase must be consistent with the exemption reason being claimed. This form must be filled out to completion, and you must select if the exemption is to be used for one or multiple transactions. You also need to fill in the name and address for both the seller and the purchaser, and select the exemption that is being claimed. Additionally, the burden of proof is going to fall on the shoulders of the person claiming the exemption. You must supply supporting documentation when appropriate to support your exemption claim. If the form is missing any of this information or the purchaser's signature, the seller has the right to reject the exemption certificate and charge tax, as it will be considered incomplete. So let's go over some reasons why you may claim an exemption in PA. The first reason you may qualify for an exemption is that you are an exempt entity, such as a government organization or a qualified nonprofit. Items purchased by the state and federal agencies, as well as PA school districts, are exempt from sales tax in most cases. Catholic and private schools will receive a 76 number to claim on their exemption. Regarding construction contracts, the exemption is going to be limited to building machinery and equipment and not the governmental organization. For nonprofit organizations or institutions of purely public charities, there is a limited exemption on purchases. Examples of institutions of purely public charities are going to include not-for-profit hospitals, volunteer fire companies, and churches. Organizations that qualify under this category are given a 75 sales tax number by the department. So when I say limited exemptions, I mean that there are certain requirements that must be met to consider the purchase as exempt. The items or services purchased by these entities must be directly used in their charitable purpose. So for example, let's say a church purchases a lawnmower to use for maintenance of their property. They will need to pay sales tax on this purchase because the lawnmower is not directly used in their charitable purpose. Additionally, all exempt items must be purchased in the name of and from the funds of the exempt organization. If you have a 501c3, you qualify for this exemption, and you must file an application, the REV 72, with the department to determine your state's exemption eligibility. If you are a business operating in a Keystone Opportunity Zone, a strategic improvement zone, or similarly designated state economic zone, you are given a sales tax exemption on goods and services used exclusively in the zone. Purchases made for items or services used by the business outside of those areas will need to include sales tax. Businesses qualifying for this exemption receive a 72 number from the Department of Community and Economic Development, which is also commonly referred to as DCED. So next, you're going to want to consider how the item is being used. If an item is being used directly and predominantly by a business in an exempt business process, it will qualify for an exemption as well. Exempt business processes include manufacturing, mining, dairying, farming, shipbuilding, and timbering. Direct and predominant use means that the items are used directly in the exempt business process over 50% of the time. So for example, a manufacturing entity purchases a forklift that's going to be used in pre-production activities such as moving raw materials, production activities like moving work in process from one workstation to another, and post-production activities like loading finished goods onto a truck. For the forklift to be exempt from sales tax, it must be used over 50% of the time in production activities. If it's used more than 50% of the time in activities that are not considered part of the actual manufacturing process, then there is no exemption. And finally, if you are buying goods and services for resale, you can complete the REV 1220 to receive an exemption on the items upon your initial purchase, since you're going to be collecting that tax from your consumer. Most of the time, this applies to retailers or wholesalers who purchase items for the sole purpose of resale. If you are deemed a retailer or wholesaler, you are going to be issued an 8-digit number by the Department of Revenue. So to put an example with this, let's say I own a car repair shop and I'm working on a car for a customer that needs a new part. I then order that part from a place like Napa or AutoZone. That part is then being resold to the owner of the car once it's installed. Since I'm purchasing the part for the sole purpose of reselling it to my customer, I would need to supply an REV 1220 to Napa or AutoZone so I don't have to pay sales tax at the time of my purchase. Earlier, I talked about the tax paid purchase resold, or that TPPR credit. That credit is claimed by those businesses who are buying items without the intent to resell and later ended up doing so, unless you are an industry that is specifically identified in the law, such as barbers or beauticians. The difference between this exemption certificate and the TPPR credit is that in this scenario, I'm not using the part for anything in my shop. Therefore, I should not be paying the tax up front as I'm intending to collect it from my customer. As a side note, to circle back on barbers and beauticians, they are required to pay sales tax on all purchases of equipment, materials, or supplies, regardless of whether that property is purchased for use in performance of these services or for resale. If you fall into this category, you must pay the sales tax and claim the tax paid purchase resold credit on your sales tax return. When a seller does not charge PA sales tax on a taxable item to a Pennsylvania purchaser for any reason other than a valid exemption, it then becomes the responsibility of the purchaser to pay the tax directly to the Commonwealth. This is called use tax. Use tax is basically the counterpart to sales tax, and these situations most likely occur when the seller has no nexus in our state. So as I just stated, use tax is sales tax that has not been collected by the vendor or seller at the time of the purchase and then becomes the responsibility of the consumer. Examples of when use tax is due is if your business makes purchases of taxable items over the internet, through toll-free numbers, from mail order catalogs, and from out-of-state locations that are not charging PA sales tax. You, as a purchaser located in PA, must essentially make a payment to cover the amount of sales tax that should have been included with your total at the time of purchase. This is the purpose of use tax. The tax rate is going to be the same as sales tax, so 6%, plus 1% local for 1% local tax for items purchased or delivered or used in Allegheny County, or 2% local tax for Philadelphia. A lot of businesses believe that they are saving money by making tax-free purchases from out-of-state vendors and are completely unaware that these transactions are often assessed upon audit by the department. Since assessments include interest and penalty on top of tax, businesses in these situations have increased operational costs by not voluntarily addressing their use tax obligations. Businesses who are registered for sales tax may remit their use tax as part of their sales tax return. If you are familiar with a return, this line or this item will go on line 6. Businesses with ongoing use tax liabilities who are not registered for sales tax should apply to the department for a sales and use tax account through the MyPath system, which we discussed earlier. Businesses with infrequent use tax liabilities may use the department's online use tax payment option, which is right on the MyPath homepage, which again is a non-locked-in function. Individuals or sole proprietorships may also use line 25 of their PA 40 in order to file their use tax. So sales tax is one of the most, if not the most, complicated taxes for taxpayers to deal with. There's been a lot of information that has been thrown at you today about an already very nuanced topic. I want to go over some resources that you can refer to, which are available on our website. A lot of these are things that I have already mentioned earlier throughout this presentation, so it's going to merely just kind of serve as a reminder. So I mentioned this one quite a few times throughout this presentation. This is our retailer guide, the REV 717, and it is a great booklet for determining goods and services that are going to be subject to sales tax. It also provides some information on some of the other topics that were discussed today, as well as topics like petitions for assessment, construction contracts, motor vehicle lease tax rates, and more. Here we have the REV 588, Starting a Business in Pennsylvania, a guide to Pennsylvania taxes. This is a really wonderful resource that touches on all the basics for new business owners. And this guide includes information for sales tax, as well as registration, employer withholding tax, and other items that go into owning and operating a compliant PA business. The REV 819, which I talked about when discussing due dates, is that schedule that we put out every year that breaks down filing and payment due dates by filing frequency. The current year schedule is published and available under Forms for Businesses, Sales, Use, and Hotel Occupancy Tax Forms, or you are able to just punch in the form number in the search bar on our homepage and it will pull up a link directly to it. Again, the schedule outlines all of the period end dates and the due dates, and even provides more information regarding those accelerated sales tax prepayment requirements that I had mentioned briefly earlier. The REV 1611 is the form that is used to calculate the interest on all taxes due after January 1st, 1982. Earlier, I mentioned that interest is calculated on a daily basis. It's calculated by taking the amount of the tax due and multiplying it by the number of days past the original due date and then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rate for any given year is established by the U.S. Treasury Secretary and becomes effective January 1st of each year. For the current year, the tax rate is 7% annual or 0.000192% daily. So we do strongly encourage all of our customers to use our online customer service center. To do this, you can visit the URL that's listed on the screen or click the customer service icon, which is directly on our homepage. Here you can find thousands of answers to frequently asked questions. These responses are updated regularly to ensure that the information you are receiving is accurate and relevant. If you're not able to find an answer to your question through our FAQs or our general website resources, you do have the option to submit a question to the department. For this, you will need to log in. You'll need to create a profile in order to send in your question. You can either send in a general tax liability question or a more pointed question regarding a specific scenario to a trained representative who will specialize in sales tax. We will review your submission and respond to it within 72 business hours in a process that's pretty similar to sending and receiving emails. And last but not least, we have the customer experience call center. Here you will be able to speak to a representative that is skilled in whatever particular tax type that you pick from the menu prompt. Our regular business hours are Monday through Friday, 8 a.m. to 5 p.m. And if sitting on hold isn't exactly your thing or you don't have time, we do have the option to schedule a call. As explained earlier, this option allows you to schedule a date and time that works best for you, and one of our representatives will call you directly to discuss whatever your question is. One thing to be aware of is that we do observe holidays, so our offices are going to be closed, and unfortunately, you will not be able to schedule a call during one of those days. You can find this option by clicking the schedule a call icon, which again is directly on the revenue homepage. Okay, so that wraps up the module for today. Hopefully that was informative and helpful. But before we part ways, I want to open up the floor to see if there's any leftover questions.
Thanks, Sarah. It looks like we don't have any specific questions, but I'm going to just encourage our attendees to post their questions in the Q&A, or if they would prefer, I could unmute them. I also thought, and this is something I haven't done before, but I was wondering if there was a question that our experts did answer that they would like to expand upon or bring attention to it, since it's kind of a common question. So I'll just throw that out to Alicia and Kyle and Eric. Not necessary to mention it, but or to bring it up or to talk more on it, but I just thought I would throw that out. Sales tax is always it's always that topic that everyone has many questions on, and so it'll be good for everyone to kind of go back and re-listen to the recording as well. Don't see any other questions. If you do want to be unmuted, you can throw that in the chat and I can unmute you as well. And Sarah, a little bit, I'm going to put you on the spot.
Okay.
Next month, we're doing withholding basics.
Yes. Correct.
And that's a new one for us. Mm-hmm. And I didn't know if you wanted to give our attendees maybe a quick 2 or 3 sentence comment on it.
Absolutely. So it'll be pretty similar to the sales tax basics one. It's going to just cover the basics of what is employer withholding, when does it apply, how is it calculated, how do you file and pay. Something that is new that we talk about in this module, if anyone has ever dealt with employer withholding or is familiar with it from the past, either through eTides or what have you, is it all used to be one category. So anything that was 1099 related, such as your 1099Rs, which is for retirement, 1099 miscellaneouses or NECs, which that will be like contractors or oh gosh, like dividend income comes on a 1099 miscellaneous, or W-2s all used to be one category. With our new MyPath system, if any of you have created a profile and pulled your accounts over, it is now separated out into 3 separate categories. So we'll talk about that. We'll go into a little more depth about how to identify, when do you pay someone on a W-2 versus a 1099, and the rules regarding those. We define employers and employees. We talk about the for non-residents of Pennsylvania. We have a couple of states that are reciprocal states. So the tax is withheld for, or they don't owe PA taxes. So we touch on that. We go into that a little bit. And then again, your filing basics both for your regular your regular withholding returns, and then there are year-end returns as well. So we cover all of those fun topics.
Awesome. And I didn't know if you wanted to talk very briefly, maybe about the videos that you have posted on the MyPath website.
Yeah, absolutely. So if, again, you are new to MyPath, you haven't even looked at MyPath, or you are just getting started with it, we do have videos that are available on our website, so revenue.pa.gov. They are called our 411 videos, and they cover all types of information as far as different functions that you can do, either non-logged in functions. So basically anything that is on the MyPath homepage is going to be considered non-logged in, meaning you don't need to have a profile. So we cover all of those. We also cover any logged in functions as well. So what is available to you in your account once you've created your profile. We have one on how to set up your profile. We have ones for individuals, and we have ones for third-party users as well. So that typically is going to be your tax preparers or CPAs.
That's great. And I know I've watched a number of those videos, and they're relatively short and very informative.
Yeah, they're not anything crazy. It's just probably usually around like 4 minutes. So nothing too painstaking to watch.
Yeah. Okay. Well, I don't think there's any other questions, but I'll just, I guess one thing that I forgot to do, let's see here a second. Let me throw out this, let me see if I can launch the poll real quick. While our attendees are answering our poll question for today, as a reminder, again, once I end today's webinar, I will be sending you an evaluation from the Small Business Development Center. It's about 10 questions. That won't take you that long. Well, we want to get some feedback from today, as well as your feedback on other topics, formats of training, and days and times of training. And then again, next month is Withholding Basics. We'll be sending you today's recording, the PowerPoint presentation, the flyer on our tax series, and the links to sign up for upcoming webinars. So awesome. Okay. Well, with that, Sarah, Kyle, Alicia, and Eric, we appreciate the experts that you are being with us today. We look forward to having you here next month. We will be back online at noon on Wednesday, April 12th, talking about withholding basics. So we'll look forward to seeing you all then. And everybody have a great day. Thanks so much for being here. Bye-bye.
Thank you.
Take
Bye.
care.